one of the things that humans are inherently better at than AI is being fallible and understanding that other people are fallible. And as long as that fallacy exists, you still need a human being on the other side. The need for people is a barbell. So you do, I think, still to this day, and I think for a very long time, still need people having the relationship with clients and building that trust and accountability. The other barbell is you still have people that are putting the information into systems that need to be automated.
Welcome to Tech Finance. I'm your host, Sasha Orloff, repeat founder and current CEO of Puzzle, and self-professed finance nerd. On this show, we dive into the pulse of B2B fintech, from newly funded startups transforming the office of the CFO to major industry shifts, deals, and partnerships that are reshaping how we think about finance. You'll hear the most important developments, essential analysis, and of course, AI innovations. This show is brought to you by Puzzle and the Turpentine Podcast Network. Let's dive in. Welcome to season 2. So you're going to notice a few changes. We're changing the name to Finance Tech, or Finance Tech if you're in New York. Still brought to you by the one and only Turpentine Network and still available on YouTube, Spotify, and Apple. We did this after evaluating season 1 and what you guys liked and what you wanted more of. So season 2 is going to be shorter episodes, about 20 to 30 minutes, just making it easier to listen in and stay on top of what's happening. And lastly, we're changing up the format just a little bit. We're going to start to focus on major tech finance news, including things like new funding, major deals, new product launches, and emerging players all in the office of the CFO. And so this can be anything from accounting, of course, my favorite, to financial planning, insights, AI, whatever is top of mind. So without further ado, let's get started. All right. I am excited for today because if there is any topic that couldn't get more exciting, it's accounting. And we're going to have a deep dive into this because there are a lot of macro shifts that are happening right now all at the same time. So it feels like we're kind of at this inflection point in accounting, capital, AI. And so what we're seeing in the news is the recent bench shutdown that happened over time, one of the largest small business accounting firms, this wave of PE firms buying accounting firms. I'll put all of the links to the articles in the show notes in case anybody had a more relaxing holiday than I did. But as we start thinking about the industry, it feels like accounting is starting to really wake up. So the traditional bookkeeping and general ledger systems were just designed for a pen and paper world. So not surprising that more people are coming in to play in the space. The industry has really enabled these legacy players to accumulate like a lot of power. And then you start seeing them doing their own products, competing on payroll, competing on invoicing, competing on bill payment, competing on bank accounts, even going so far as launching a nationwide television campaign telling the industry to fire their accountants. And then the other thing that's hard to ever ignore is just the sheer velocity of AI is just incredible. And it gets people either very excited or very scared or both. And we have this unprecedented amount of capital flowing into the accounting space. So who better to talk this out with me than Matt Tait, CEO of Decimal. Matt, welcome to the show.
Thanks, Sasha. I really appreciate it. And I have to tell you, out of everybody that I've heard getting into the space, you expect private equity, you expect non-tech people like me, but to actually hear and read about venture capitalist firms buying accounting firms or stakes in them, that to me is as crazy as anything, but also I think really cool.
It is lots of capital and maybe not enough places to go. And so, but this is where the conversation gets fun. So Decimal accounting and tax firm, you guys came onto the scene with a major splash, and you'll learn why in the audience. Matt is incredibly smart, thoughtful, and obviously ambitious. So let's see, looking at your boilerplate, Decimal previously acquired the accounting service business owned by Facta, KPMG, that little small accounting firm, Spark. So you acquired them from KPMG and you've been growing quite quickly. So today we'll talk a bit about what's happening in the industry. I would love to learn more about your vision of the future of accounting, what impacts AI will have on accounting. But first, let's dive into something a little bit more top of mind. So over the holidays, Bench went from one of the biggest bookkeeping tax firms for small businesses to insolvency. Now, they built their own general ledger. They had their own bookkeeping. They had their own tax practice. You also have your own bookkeeping and tax practice, and you bought Spark from KPMG, which is the general ledger. So I'm sure you have an interesting perspective. So let's just start with what do you think they got right? I mean, Bench got a lot of things right. They raised $100 million of capital. They had 10,000, 12,000, 15,000 clients, according to the press. They have done something right. What do you think they got right?
I think they got a lot right. One of the biggest things that I think Bench and other companies, and even the failed ones like Scale Factor, combine those two together and you have about $220 million of wasted venture money, but which is a small number. What I think they really got right though was the productization of services. So many professional services, accounting being, I would say, the worst of them all, views the billable hour as the economic unit of measurement. And what a bench has, I think, pushed through the entire economy of accounting is that you can productize your accounting services for fixed recurring cost, taking that kind of software mentality and applying it to a professional service that is basically repeatable on a monthly basis. And I think that in and of itself, they forced it through because they were backed. They grew so fast. They had the capital to do it. They forced this change on the industry, which I think is an amazingly good change.
One of the other things that I think they've done, they came in with quite a low price point. Is that true? How do you see what they were charging compared to the rest of the industry, maybe yourself?
So that would be one of the things that I don't think they did well. And I think it's also one of the things that ultimately led to their failure. When you look at creating a good sustainable business model, you have to do so in a way that gives you good margins, good profit for growth, but also that you aren't spending $2 to capture $1 of revenue. And ultimately, the companies
You clearly don't live in Silicon Valley.
I know I clearly don't. But if you're a professional services business, eventually you actually have to get to profitable much faster than tech companies because you don't have the outside capital coming in for smaller chunks of the business. And so if you want to maintain control, you actually have to be able to make money. And when you're trying to grow fast, and Silicon Valley does a great job of this, you lower your price point to capture more of the market, knowing that you can raise prices over time or that costs will come down and therefore making it a viable economic business. The problem with professional services and what Bench did is they did that without the off ramp, without the ability to get back to profitable to raise prices. And so then you have a bunch of accountants, and accountants are by nature fearful of change and competition. And so what they did, the accountant said, well, if Bench can do this profitably at $350 or $250 a month, I got to be able to do it. So I should be able to do it. So I'm going to do it and we'll figure it out. What nobody ever does is actually figure that out. And so that's one of the bad things that Bench did. And that existed from the entirety of the business of saying, rather than saying, what should we charge based on what it costs us to sell and what it costs us to operate, they said, here's what we should charge. And then they tried to fit everything into that box. And to be fair, I don't know if anybody has more experience in operating the exact type of business that Bench did than I do, and that Decimal does, because that's what we bought with KPMG Spark. And we found that KPMG did the exact same thing as they tried to grow it. They artificially lowered price points, and we inherited $50 a month clients and $100 a month clients. And ultimately, we either raised their prices or helped them find other service providers. But that I think is one of the bad things that Bench did was artificially lowering price points without the economics to back up how or the off ramp to get to better.
I'm curious, what's the range of sort of margin of a bookkeeping firm?
Oh, it's worse than you would think. We've seen everything from 12% to 35%. And most accounting firms are operating in that, call it 25 to 35% margin profile. But it's really about value creation and like what value are you creating? What profit margin are you creating? And it's not as good as you would hope.
I only mention that because if you're taking something with that type of margin profile and then you're trying to add venture scale of marketing dollars, sales and marketing dollars, or even adding on then the expense of a general ledger and maintaining that, which is a complicated piece of software that requires tends to maybe 100 or so engineers. That's a lot of customers you have to clear a hurdle just to kind of break even on some of the sales and marketing. So I get that. You are one of the few firms that I've ever met that actually has a technical co-founder. So how do you think about how firms should or should not adopt technology?
We're weird in a couple of senses. Number one, none of the founders are actually accountants or have an accounting background. Number two, we are venture backed. And then number three, you're right, I have a technical co founder. All of this meant that when we started Decimal, neither Jacob or I had the ability to actually operate in the business. So, whatever services we were selling, we weren't capable of actually doing the work, which meant that we built a business that could sustain both us and broader overhead, meaning better margins, better kind of value creation by client while also doing the same types of work. And so, number one, that was a good foundation to set. As you talked about in your intro with the prevalence of AI, with how quickly we are seeing the changes in general technology, let alone accounting and finance technology. To me, if you want to successfully scale, if you want to successfully grow, you have to have somebody that is technically focused as 100% of their job. You have to figure out, number one, what are the new technologies that you can use that will improve your firm? Number two, what are the new technologies that you can layer on top of the old technologies that also improve your firm? And then number three, how do you take all of the data that you are creating and that you have in your business and using that information and that data to improve the business, improve day-to-day lives of each individual employee every single day? You cannot do that without a technical person specifically focused on that.
It's funny as you're saying that, it's reminding me of a story. So I was just a young pup graduating from graduate school and went to go work at Citigroup. And I have a younger brother who I obviously love, but for anybody that has a sibling out there, you never want to listen to your younger brother. They're always like a punk. But he did start at Yahoo when he was 16 years old as a software developer. He's just like the smart one in the family. And he would always tell me as I was at Citigroup in my first job, and I would always complain. And he's like, you guys have a software problem. And I was like, but I can't do this and I can't build this model and I want to use machine learning and I want to use, and he's like, that's a software problem. And I was an analyst and doing like a bunch of mathematical modeling. So you have a software problem. And when it finally clicked that, oh my God, we have a software problem, I looked at the top and I think it was like almost 50 executives at Citigroup. Nobody had ever written a line of code before. And I was like, "Oh, well, yeah, no." And this was in the early days of like the cloud was just emerging and like this was that mobile was just emerging. And I was like, "Oh my God, we have an entire leadership. Nobody's ever written a line of code. This is the future. We're in trouble." And then I quit and I started a software business that worked on financial services and we built a couple of big companies along the way. And so I really admire the fact that sort of you're at that moment because I think we're at another inflection point, which is artificial intelligence, being able to do things that software hasn't been capable of. So let's use this as like a bit of a shift to like tell us about Decimal. Why did you start it? What's the vision?
Number one, we started this just to help make small business easier to be in a business, easier to run your company. I always joke the three worst things about running any business, and you get this as much as I do, are HR, IT, and accounting. If you have to focus on any of those things, you are not happy as a CEO or as a business owner. And yet they're harder than they should be. And so we started Decimal to take over this problem because, like you, this isn't my first company. This is the third company that I've run, and I tried to hire the best accountants, controllers, bookkeepers. I tried to hire the best at the time. They were called cloud accounting firms. And to be frank, they all sucked. And so we started Decimal because it just had to be easier to pay your bills, get paid, and track it all. And we knew that in order to do that well, we had to establish a very solid pyramid foundation for work, where the base of that pyramid is technology. You need technology to be able to do as much as humanly possible behind the scenes and to make work for every individual easier. Number two, you had to look at outsourcing as a cost structure change. And so we have a very large team in the Philippines that is effectively doing all the work. And then number three, you had to divorce the doing of the work from the client relationship and experience and make it so that your US team is focused entirely on that client relationship, client experience, and that final quality. And so we started Decimal to effectively do that and to be the best users of technology out there. And so at every phase of Decimal, at every step along the way, we have looked and said, like, what are the leaps that we can take that other people aren't taking that provide better outcomes for our clients and better outcomes for our team? And if we can align those incentives, then we can do that. Now, along the way, we've also expanded our mission to saying, hey, we also just want it to be easier to own and run your own bookkeeping company and your own bookkeeping firm. It's harder than it should be. And it's really an entrepreneurial industry. And so, how can we expand our mission and increase the size of our umbrella just to help make it easier on people? And so, that's kind of how we've started. And since that time, and we launched January of 2020. So, 6 weeks later, something super fun called the pandemic hit. But we've grown to help over 1,000 businesses, and we've got over, I think, almost 110 employees at this point, and we're enjoying it.
Tell me a little bit more about your founding team. 'Cause as you mentioned, you do have a technical co-founder. And so I imagine that from day one, that indicated technology was going to play an important role of how you built and differentiated Decimal in the market.
The other thing that we took was we said we were going to be remote. So no matter what we did, that was pre-pandemic. So everybody else thought it was cool during the pandemic. We got lucky that we thought about it right ahead of time, which also meant that we had all the equipment that everybody was scrambling to buy. But we looked at Jacob and I as a co-founding team. At the very beginning, the two of us indexed towards me and kind of the sales and marketing go-to-market side, and him as the technical side. And then Katie Lamb was our first ever hire, as she was an actual bookkeeper. She's still with us today, doing amazing work, has grown into multiple positions. But we really looked at it from that perspective of how do we use technology to make Katie's life easy? How do we bring in as many clients as we can with great expectations and create great experiences for them? And then how do we grow fast?
Hey, we'll get back to the conversation in a moment after a word from our sponsors. Building a company is hard enough. You shouldn't have to second guess your numbers too. One day, an investor might ask you a question that you just can't answer. The next, you realize your books aren't as clean as you thought. Sound familiar? Puzzle is rethinking accounting from the ground up with an AI-first ledger that eliminates repetitive tasks and gives you real-time financial clarity so you can focus on running your business, not fixing spreadsheets. Accounting should work the way you do. Fast, intuitive, and built for the future. Come check us out at puzzle.io.
Ever feel like managing your business finances is a full-time job on top of your actual full-time job? Yeah, me too. That is until I started using Found. Found is a business banking platform that lets you effortlessly track expenses, manage invoices, and prepare for taxes. You can even set aside money for different business goals and control spending with different virtual cards. I've saved so much money because Found helps me identify tax write-offs. And I saved so much time that I can now devote to chasing new opportunities and doing the work I enjoy. Oh, and by the way, other small businesses are loving Found too. This Found user said, "Found is going to save me so much headache. It makes everything so much easier. Expenses, income, profits, taxes, invoices even. And Found has 30,000 five-star reviews just like this." Open a Found account for free at found.com/econ102. Found is a financial technology company, not a bank. Banking services are provided by Piermont Bank, member FDIC. Don't put this one off. Join thousands of business owners who have streamlined their finances with Found.
So I know today is a big announcement where you are now the largest bookkeeping firm on an AI native ledger. And so I do have some inside baseball here because it's Puzzle and I'm deeply integrated with Puzzle. But can you tell the story a little bit about the start of how you thought about technology from day one, how the acquisition of KPMG Spark came, and then leaning into Puzzle?
So for us, technology is about making things easier and better. And what that meant is that every step in the technology stack, every block that we've built, we needed to look at what made things better and easier. And sometimes that meant using legacy software like a bill.com or even QuickBooks. And you look at it and you say, okay, we have to use these. But then you also look and you say, hey, what are some nimbler, faster, better competitors? What can we use that creates a better outcome for our team? On the workflow side, on the integration side, on the data side, like how do we use everything and how do we make them interchangeable blocks too? So that as people are building better technology, nothing is ingrained so heavily in Decimal that we can't rip it out for an improvable technology piece. And that's actually really hard to do well because it's easier to not do that. But so many companies become successful for a short period of time and then reach this like, oh crap moment where it's like, oh my gosh, everything else is leaps and bounds ahead of where we are. We need to change it. And then ripping it out becomes impossible. And like going back to your Citigroup analogy, I guarantee that that's part of what happened was you put in this legacy system that worked at some point, and then you just keep building onto it. And then at another point, you look and you say, wow, we should have changed sooner, or this is too ingrained. So we built with that kind of thought process in place. Now, when we made the acquisition of KPMG Spark, now that came in a very opportunistic way. We weren't seeking it out. KPMG actually called us. They said, hey, you're stealing all of our best employees. You're taking all of our biggest clients. Would you like to just buy the whole thing? Yeah, and they threw out a number, I threw out half that number, we agreed on my number, and it actually ended up being an amazing process, but we looked at it for in 2 ways. Number 1, we bought it as a services company, so the value that we put on that business was as a services book of business, and so that was the acquisition for us was, hey, we knew our team was technical enough that we could support the ledger, we could maintain the ledger as long as we needed to, and they built a stable enough ledger that that was possible. We needed to make some minor improvements and tweaks, but we bought the services side of the business, and so that became an acquisition and integration, and so we looked at it as a people thing, and the people are amazing. That team is unbelievable. It's amazing how much of the team that was acquired by KPMG stayed and how many are still here with Decimal. Yeah, and that's kind of a huge testament to what the original founders built and even how KPMG stewarded it through their ownership. And so we bought that. Now, the secret additional like and for us was the ledger of it in and of itself. Jacob, my co-founder, he's the one that looks and sees the world 10 years ahead. And he looked and he said, "Hey, there are some companies out there, Puzzle being one of them, that are building these new AI native ledgers that actually could compete with QuickBooks or provide us at the very least with some diversification away from QuickBooks and zero as ledgers. And they're not ready yet, but in a couple of years, I think they're going to be ready. If we own a ledger, then at some point we have a really good asset that we can transition over there and create this scale proof point because there are hundreds of clients over there. And so we had this and we maintained it and we grew it. And then to our conversation today, we looked this last summer in 2024, and we said, hey, there's some of these ledgers that are available and they're ready. And we think they're ready. So let's go explore. And we reached out to you and a couple other companies and we said, hey, we want to know more. We want to spend some time with the technology. We want to also spend some time with your team. We want to get to know your roadmap, your theories of the future, and on go to market and value creation. And we spent a week out in San Francisco and spent time with all the teams. And ultimately, it was a no brainer for us. What you all are building at Puzzle is and was ready to scale. And that doesn't mean 2 or 3 clients and a test. It means, hey, I've got 200 plus businesses. Are we ready to do this? And Puzzle's ready. And so we just transitioned 200 plus clients onto Puzzle's ledger. And as you said, I think it makes us the biggest bookkeeping accounting company or firm in the country, maybe the world, using an AI native ledger.
Can you talk a little bit about how you went through your thought process? Like what was important? If I'm another firm out there potentially, or I'm even just another platform and I'm sort of thinking about it, like what was important? Because I asked this because you were maintaining a ledger, you had one, I'm assuming you saw the amount of investment that would be needed to like redesign a core and make it data for AI because it came kind of out of nowhere and has been going fast. How do you think about evaluating all the different platforms out there from the legacies to the modern ones? What's your thought process?
So that's a great question. There's one foundational belief that I have and we have at Decimal, and we share it with Puzzle, that I think underwrites that entire thought process. And that is, I firmly believe that software and services in accounting should not exist in the same business. as proven by Bench, as proven by Scale Factor, and today as proven by KPMG Spark and the Decimal Ledger, I don't think they go well together. And so to me, I think great technology companies should build great software and great technology. And great accounting firms should create great outcomes and experiences for their clients using that technology. Now, what I hope for and what I look for in good technology partners is people that actually want to partner together to create something better. That want to tell me, how do I improve my services and use their technology better? That want to listen to our team on how to improve their software to make it better for everybody to use. And creating that type of relationship is really, really important. I've written in the past about how I hate the word vendor. I just fundamentally, that feels like a negative, like pejorative term to me. But really, in accounting, it's a bunch of vendor relationships. And it's because you have so many massive players with so much market share, you don't actually have real conversations. And so, as we looked at technology, number one, there's something to be said for, you just have to use the big player. You have to use QuickBooks to some extent. You just can't get away from it. But you always want to look for somebody that will treat you better, that won't try to steal your clients, that won't try to steal your customers, that won't talk negatively about you, that'll actually listen, that'll have good support. That I think is really important. You also want to look at who has a similar vision for the future. Who is really looking at the next 2, 5, 10 years and saying, hey, we want to make your life, your employees' lives, and your clients' lives better. And having a clear roadmap on how to get there. The other thing that I think is really important, and you and I have seen this in tech quite a bit, tech CEOs have to play a dual role. They have to sell a lot of hope to investors. And then they have to take that hat off and put a new one on and say, here's what I can really do to clients and to accounting firms. And finding people that are very honest and very trustworthy, and here's what I can do today versus here's what we're building for the future, is also something that I think is really important. And we've worked with great tech companies even before our relationship with Puzzle. I think of Settle, I think of Routable, I think of even Gusto, I think of Rippling. We were Rippling clients within 2 days of starting. Yeah, and that was 5.5 years ago. Like, really finding companies that want to listen and build together, and Ramp's another good one. That I think is really important.
How much I mean, I think of 2 or 3 challenges also in this market. I think the first one is, how much did you have a vision of what the client experience should be at Decimal from day one? And how has that changed given some of the new players in the market, from the Ripplings and Ramps, Routables, et cetera, of the world, Puzzles of the world, and then some of the sort of thoughts about how AI might have changed some of the perspective from 2020 to today?
I think AI definitely changes it, but in reality, AI is just the next evolution. It may be a bigger one, it may be a faster one, but you went from paper ledgers to computers and calculators to the cloud to now AI. Like, in a lot of ways, AI is just the next evolution. It's one of the reasons why I don't love and believe in the whole fear factor, because things are always improving. They always have been. AI is just the next one. Do I think it's going to be bigger and much more impactful? Absolutely. We could talk about that for hours later. But to me, I view it as the next evolution. No matter what you do with technology, you can never replace the trust, accountability, and credibility of having a human being do things. And that trust, accountability, and credibility is essential to a great client experience. And I think that that is going to continue to be essential. It may change its lens, it may change its perspective slightly over the next 5, 10 years, but that's going to exist. People are going to want a hand on the wheel and know that they have somebody they can trust, and that somebody is accountable, and that that person has inherent credibility in what they're saying and doing. And I think that that's a really essential component. The client experience is something that hasn't changed a ton since we started Decimal, because I don't think the client has changed and the client's expectation hasn't changed. How we do it and how the sausage is made has changed astronomically over 5 years. But People want to know that they can trust the person that they're talking to and that's handling their books. That person is credibly there and that person is accountable to whatever mistakes that they make. And let's add a fourth one of is exceptionally responsive, because too many times in relationships and experiences and professional services, responsiveness is something that people talk about but don't actually do. And if anything in this whole puzzle partnership between Puzzle and Decimal proves anything, is that me and Decimal, we believe in acting first and talking second. And I think that's a really key component to trust.
I'm picking up on the word trust and accountability, which clearly makes sense. The world of accounting has federal liability or tax liability. If you have investors like you and I do, there's shareholder liability. We have a responsibility, fiduciary responsibility to our employees, to our shareholders, to our customers. And so there is a world in which there always is a human involved because of all of these things in accountability. There's also quite a few venture capital firms that might take a counter narrative position that this stuff is going to be entirely done with AI. Why? What's your sort of message to all the investors who are pouring hundreds of millions of dollars into this is an automatable thing with software. We don't need humans anymore.
Can and should are two different things. Number one. Number two, the definition of insanity is, I mean, it's butchered all the time, but it's, doing the same thing over and over again and expecting a different outcome. And as KPMG Spark, as Bench, as Scale Factor, as a million other companies, there's a graveyard full of them, have proven. I don't think that works. Number two, the need for people is a barbell. So you do, I think, still to this day, and I think for a very long time, still need people having the relationship with clients and building that trust and accountability. The other barbell is you still have people that are putting the information into systems that need to be automated. And as long as human beings are doing that, and they will always do that because they're the ones charging things, they're the ones doing things, they're the ones writing invoices. Like there is still a lot of human data entry into anything requiring bookkeeping and accounting. And as long as that fallacy exists, as long as fallible people are doing that, you still need a human being on the other side, or else AI will continually believe that. Like one of the things that humans are inherently better at than AI is being fallible and understanding that other people are fallible. And so I think for a very long time, you still need a human being there with that deep understanding. And the other part of it too is anybody that's done bookkeeping and accounting knows that the greatest delays in getting somebody an output, their books or a bill paid or whatever, is a client's ability to get you that information. And as many times as AI wants to call somebody, Zoom somebody, email somebody, guess what? It still isn't going to happen. And so having a human being be there and knowing it. The other thing is when people know that it is a technology doing it, they hold themselves less accountable to that technology than they do a human being. And so right now, there's just too many gaps that exist. I don't know. Does that kind of make sense?
It does. The other thing that was coming top of mind is I was having lunch with an investor yesterday who's been like looking at the space for quite a long time. Looked in Europe, in the United States, at sort of subledgers or general ledgers at firms was pretty confident. He made a comment something like, the math just doesn't math. And when I was sort of digging in a little bit more is, well, like if you are going to have something that requires trust, accountability, and human interaction, and then you try and mix it with software, the math doesn't math. And part of it is just the margin of the human interaction. The scalability of needing human interaction has a different type of an ROI and a return threshold, a really good one, like, positive cash flow and profitability is something Silicon Valley doesn't do really well along the way. But on the other side, if you do truly have a great piece of technology and you're limiting it to the amount of clients that you can acquire using venture capital, sales, and marketing dollars, you're limiting the potential. So both parties seem to limit the potential outcome together. And so that's where sort of the partnership. But he said at the end, he goes, the math doesn't math. The math, but together the math doesn't math. And so I thought it was sort of like, I thought that was interesting. I did ask him a little bit about, does AI change this? And I think he came to a certain similar perspective that you did, which is it will always change. Like, we got the calculator and we got the spreadsheet, and it did automate more than was automatable before. But at the same time, that doesn't replace the human interaction. You still need it moves to higher order work, and you can start to transition to a little bit more advisory, a little bit more helpfulness, a little bit more, maybe even psychiatry, client psychiatry in building business. Yeah. Cool. How much do you think? Let's actually take a little bit of two perspectives. Let's say AI just makes some meaningful incremental improvements. I think there's just so many different edge cases between the data is there, the data isn't there, the data is duplicated, the data is validated. Like, what's this? The client, there's just like missing information. And until you have the actual person providing the context, like, you can only automate so much. But let's just say, for some magical world, that there's some way in which it is mostly fully automated. What does the world look like in the next couple years, in the world where it's an incremental improvement? It's like the spreadsheet. It's like helped a lot, especially with like accruals or accrual schedules. And let's take the place where it actually automates the majority. I think we both agree it doesn't automate all of it, because you just don't ever have all the context, but it automates like a meaningful amount. How does that factor into how you think about building Decimal?
So I think taking your two perspectives, one, it is only an incremental benefit. One of the toughest things about accounting, and you get this as much as anybody, selling software to accountants is a really tough slog because accountants don't love change and they don't do change and they don't do risk very well. I think it's getting better as an industry, but in general, it's just a class of human beings that don't think that way. And it's one of the things that makes it fun as being Decimal, because it gives us the chance to get generations ahead and then to reach a hand back and say, hey, let us help you get here too. And that's a fun place for us to be. But here's the thing, if AI is only an incremental change, and I think most AIs that are layering on top of legacy software, you and I have laughed. I'm a Midwesterner in Indianapolis. My grandpa grew up on a farm, and one of his favorite analogies is, if you put lipstick on a pig, it's still a pig. And when you think about AI on top of legacy software, it's lipstick on a pig. The cost and the benefit doesn't really match. It's a novelty as much as anything else. And and so to me, I don't think you see a lot of industry change. Now, there are incremental things I think you should do and that we're certainly doing that I think will continue. But to me, when you look at, can it have an astronomical change? That requires rethinking everything, rethinking how you staff your team, rethinking how you train your team, rethinking how you train your client experience. And that's the fun part, because we get to now look at our team that's operating on Puzzle, and we get to replace and change cost. So we now have a layer of QC that we get to remove because we know that it's happening within a ledger in and of itself. That's pretty nice. Now, I can either absorb that cost into my own profit, which maybe I do for a while, but eventually price compression happens. So I have to put that cost somewhere else. And so what we choose to do is we then look at, how do we change the experience? So if all of this is changing, how do we then merge our team into being more advisors, which requires training? They haven't had to play that role in the past. So how do we continue to create value? How do we use the Puzzle software? How do we use other AI native software to create more value? And I want to actually start in this case with, how do I create more value for my team and then teach them to create more value for the client? Because if I create more value for the client first, I cut my team out of it and I create a gap. And so in this case, I'm actually going to go through my team first, train them on how to do more and how to have a more advisory type conversation. And this is going to take a while. And then using the software, creating a better experience for the client. And I think that's the way we look at it. And to be fair, I think we'll end up very quickly in the AI changing everything, but it's not like when Zero was released in accounting, it was a new hammer doing exactly what the old hammer did. It just had a different color and maybe a different shape. Like, Zero is fundamentally about the exact same as QuickBooks. But these AI native ledgers, what Puzzle is doing is an entirely different thing, which allows us to staff, structure, and change everything.
We actually, it's funny. We had to actually design our whole user experience differently based upon that exact comment. It's funny enough. It took us actually probably another about 9 months actually to redo it. But one of the bubbles we live in Silicon Valley, for better or for worse, is like, of course everybody wants AI. You want AI for everything that's possible. And that was like not the case with accounting firms. And they were like, no, we want to control it. And so he said, oh, that makes sense. Accuracy and trust is there. And so we had to redesign. We said, all right, listen, we generate your bank reconciliations for you automatically, and we check whether they balance or not. And I want to walk through every step because, like, what if it hallucinates? I want to make sure it's right all the way. And we're like, but like we just told you that we generated it and we validated it. And they're like, yeah, but I don't trust you. I was like, oh, that's totally fair. And so we redesigned the process with one of the accounting firms of like, all right, here's every step and we generate every step. And you can literally press next on every button and you can change anything like along the way. And then the same thing for categorization. We were like, vector embeddings is like the future. It's this lookalike. It's way more powerful. It's mathematically better than any other modeling. They're like, well, where are you sending our data? And I don't want to control it. And like, how is this there? And it's like, great. You can have literally no automation. You can categorize everything yourself. That you can use a set of rules like kind of QuickBooks does, or you can opt into like a vector, like a modern AI machine learning model. You get to choose. So we build it, and then we actually have to create like these functions. And it's been this like really great learning experience. And I totally see why, because at the end of the day, it doesn't matter whether the human bookkeeper on your team made a mistake or the AI made a mistake. If you can't see and verify and understand every step of the process, well, then you can't find out, is it actually accurate? And if it's not, because accounting is death by like 400 million edge cases, well, you need to be able to figure out what step it was and then go in and fix it, understand it.
No, and I think one of the things that you just pointed out there, I think is so important to where we can be better in the future. Accounting is an echo chamber. Tech is also an echo chamber. And we spend so much time existing in those echo chambers that we start to believe everything that we're hearing within them. And we start to think that this is the future and this is what people want because this is what my buddy wants and the person I had lunch with wants. Getting out of that and giving ourselves the opportunity to learn from each other is what allows you to then understand what the difference is and how to create that audit log. Like, people always create mistakes. I guarantee every one of our clients, we are going to make a mistake. But you know what we're going to do? We're going to figure out what it was and we're going to fix it quick and we're going to make sure the exact same mistake doesn't happen again. You know what AI also does? That. And you know what? If I can build trust in my team to do that, and then when we make a mistake, guess what? We were making mistakes before we started with AI. That's the other thing that I think is crazy when I listen online and read what people are talking about. They're like, well, AI was making a mistake and the person never would have made this. That's crap. People are making mistakes, and it's just owning them the same way you've owned them in the past, fixing them and making sure it doesn't happen. And to me, that's just a normal thing that you're dealing with.
So as we get to like where we are today, Decimal as the firm, the largest firm on an AI native ledger, where does Decimal go next?
You know, I think for us, we we really want to help other people. And we're going to continue to grow and we're going to continue to make things easier and we're going to continue to do what we do. But a big step in this is we actually want to help other firms implement Puzzle and other AI tools at scale. If there's anything we can do to say, like, hey, let's help take the theoretical and make it tactically available, let's do that. Like, we now have hundreds of clients on an AI native ledger. A lot of firms don't have hundreds of clients. We want to help figure out what the perfect client is for Puzzle, help them put those clients on there, help integrate with the workflow systems that everybody works in and make it easier and help people diversify and hit this next stage of accounting, this next evolution. That's a big part of it for us.
I think it's exciting. We've there's been a lot of chatter, there's a lot of content, and it still always felt quite conceptual. And now it feels like 2025 is the year it becomes implementable, it becomes having an impact. I think it's really fun. So if somebody is a new firm out there, if somebody is a new modern player out there who wants to get a hold of you, how do they do that?
So number one, everybody can always follow me on LinkedIn. They can also go to decimal.com. If anybody specifically wants to talk to Puzzle, we'll do puzzle@decimal.com. They can email and we'll help out. So we're looking forward to it.
Well, I'm wishing you the best of luck in 2025 and beyond. And Matt, thank you for coming on the podcast. Appreciate it.
Thanks, Sasha.
Thanks for listening to Tech Finance with Puzzle and Turpentine. If you got value from this episode, please share it with anybody building or funding the future of technology. And please leave us a review wherever you're listening and tell me about what you want to hear more of. If you're looking for accounting software you'll actually love to power your company, check out puzzle.io, the modern accounting platform for the AI era. Tech Finance is part of Turpentine, the awesome podcast network behind Econ 102 with Noah Smith, Turpentine VC, Complex Systems with Patrick McKenzie, and so many more.